Hey everyone, welcome back to the channel, which is all about how to generate passive income from a diversified portfolio of high yield funds. This is episode 29 in my monthly series where I present to you my top 3 dividend fund picks of the month that are designed for passive income, and where I'll give you a quick stock market commentary, of course, how I saw the market or how I see the market in the last month. So if you're new to the channel, welcome. I'll go through a quick reminders before I give you my monthly stock picks and commentary. So this is definitely not your ordinary stock pick video or investing channel. Let me just start off with that. My investing strategy is pretty different from everyone else's, so my stock picks are different as well. So there won't be any single companies at all. I do not invest in single stocks or single companies anymore. So all the fund picks will be either ETFs or closed-end funds, which are income oriented, not growth oriented. So many have income enhancing strategies like covered calls, like leverage, or both. So this channel and my investing strategy, focuses on a long-term buy and hold income focused investing strategy. So the primary objective is to generate relatively safe, consistent passive income forever. And one important factor of my strategy is to invest consistently over time, either every month or every 2 months or every 3 months. So you could always try to capture what's undervalued in the market. So 5 criteria for my stock picks, or for my fund picks, I should say. Number 1, no single stocks or companies. Number 2, I own the fund myself, either directly or indirectly. Number 3, the fund must provide a consistent source of passive income, so a dividend or a distribution. 4, the dividend or distribution must be relatively safe and sustainable. In other words, the fund should be designed to provide us with a consistent income, even though the share price can fluctuate, or even the monthly income can fluctuate. And number 5, the fund needs to have good value. So either because if it's a closed-end fund, it's trading at a discount, or it's a very close, the NAV and the stock price is very close, or the sector that it's focused on is experiencing hardship right now, etc., etc. So we want to look for that good value. So of course, 1 out of the 3 stock picks, in case you're newer to the channel, the first one out of the 3 will be a fund listed on the US stock market, not the Canadian stock market. So you could put that pick in your RRSP to avoid that 15% withholding tax if you're Canadian. So the first stock pick will be for my American friends and for my Canadian friends who invest in the RRSP and go with US funds like I do in the RRSP. The other 2 stock picks will be regular Canadian listed funds. Also, don't forget to check out my previous monthly stock picks, especially the last video, which was a 2-part special edition where I didn't normally do I didn't do the normal format that I do, which I'll do in this video, where I really go over what I think are the best funds overall to make sure you buy in this down market, which is slowly, has recovered in the last couple of days substantially, but I think we're still in a down market. So make sure to check out that special edition stock pick video, because I go over many options of basically my favorite funds on both the Canadian and the US stock market. I literally have 2 separate videos. So make sure to check those out if you missed them last month. So my stock market commentary, what could I say? The US is officially in recession. I guess that's what I've seen in the headline. So recession means, 2 consecutive quarters with lower GDP growth or negative GDP growth or whatever it is. So, but the stock market is up. It was up yesterday. It was up today. I'm filming this on July 28th. The stock market just closed. It closed up. Yesterday went up as well. So why is the market going up when they officially announced a recession, right? Why is it going up instead of down? Well, I don't know. And you shouldn't trust anybody who pretends to know, right? That's just my opinion. I've been in the game for a really long time, everyone. And one thing I could tell you for sure is that the stock market is always ahead, right? It's always ahead about 6 months, or predicting ahead. That's why whenever you have negative news that will probably kick in 6 months, a year from now, the stock market tanks. And then after a few weeks, it gets over it. So the stock market is always ahead. And once news that's expected isn't really a surprise, the stock market, even though it's negative news, typically doesn't react negatively, or actually does the opposite. So the reality is you can never predict what the stock market's going to do, or to really try to understand what the overall market does, because like I keep saying, it's all based on human emotion, fear and greed, not logic, right? So this is why I invest the way I do. I buy and hold quality stuff long-term, or income oriented, and just live off the income they provide, right? As simple as that. This way I could just sit back, or we could just sit back and enjoy the show. Not only enjoy the show, but our lives. That's the most important thing. So the market could definitely keep going up. Who knows? It could keep going down. There's a lot of negative predictions out there, but all I could say is that you should just keep investing consistently in quality stuff. Build your own perfect portfolio designed for you according to your risk tolerance, and invest consistently over time, no matter what strategy you're taking. Okay, whether it's income like me, whether it's dividend focused or even growth focused, you should always try to invest regularly over time and try to find the best deals, because there's still plenty of them out there, even though the market is slightly recovering. So without further ado, what are the deals for August 2022? Let's check them out together. All right, everyone. Fun pick number one, my US fun pick of the month, is definitely QYLD. It was a very easy choice this month. Of course, this is a very popular covered call ETF on the US stock market. It's a NASDAQ 100 covered call ETF from Global X. Monthly payer, annual dividend rate about $2.40. So this is approximate. You can never get a perfect number with this one because the monthly dividend varies every month. So 240 is just an estimate of 20 cents a month. I know it's been a bit less lately, but it's been a lot more in the past. So I'm just, ballparking an average here. QYLD is, as we know, it's basically the NASDAQ 100, right? The top 100 NASDAQ companies indexed without financials. And on top of that, QYLD writes at the money covered call options on the index itself to generate those high monthly dividends, or high monthly distributions rather. It's not a leveraged fund. The management fee is a very decent 0.6%. So the 1 year high of QYLD, 23.15, which would give you a yield of over 10%, but now you have a fantastic deal at just over $18. So a big reduction here because the NASDAQ went down significantly in the last couple of months. You're looking at a yield of a little over 13%, and that's actually based on if it's 20 cents a month. It's a little bit lower at this price, but it could be a lot higher if the dividends go up and go back to normal levels. So I would say 13% is a conservative estimate. So a really, really good time to pick this one up. Why is it a stock pick? Well, in my opinion, it's the most attractive covered call ETF in the US still right now. I mean, you have RYLD and XYLD by Global X as well. XYLD is the S&P 500, RYLD is the Russell 2000 index, but QYLD is still by far the one that went down the hardest. So I think it's the most attractive, even though XYLD and RYLD are kind of attractive now because everything went down, right? So like I said, it was hit the hardest. It's basically past hit its lowest price ever in the last 8 years at $17 range, but it's slowly recovering because the NASDAQ is recovering. So it's already at 18. So it's a pretty attractive price point if you want to pick up some QYLD right now. It's a really good pickup. You're owning the NASDAQ defensively, basically less volatility. So QQQ, the most popular NASDAQ 100 ETF, basically does the same thing QYLD does without the covered calls. There's no covered calls there. So owning QYLD gives you more defense, less total returns overall long-term than QQQ. But remember, covered call ETFs and funds were not designed for total return or to outperform the market. They were designed for more defense and more consistent income with less volatility return. So they only really outperform the market during the bad times or a bear market or a flat market. So since we know the market usually is on the upswing, they will underperform. QYLD will underperform QQQ. So you heard it from me here. But of course, we're income investors, right? So the primary concern is not really total return, but it's consistent passive income. You have a lot of alternative options if you like income-oriented stuff. If you like the NASDAQ 100, there's a bit two safer options in QYLD, QRMI, and NUSI. So QRMI is also from Global X, but there's an additional protective put options that they buy. It's called the protective collared or something like that. So a little bit more defense, even less volatility than QYLD, but a little bit less yield. And then if you like JEPI is one of the most popular option strategy ETF in the US. It's the biggest one at over 10 billion. A lot of people love JEPI. It's basically S&P 500 with covered calls, kind of like what XYLD does, except less fees. They do covered calls on individual stocks, I believe, not the index. So you got a little bit of growth in there with lower fees. So a lot of people like JEPI. If you like JEPI, consider JEPQ. So change that I for a Q, and JEPQ is one of their newer ETFs. Does the exact same thing JEPI does, except on the NASDAQ 100 index. So make sure to check that out if you're interested. I also suggest check out this cool video that I saw recently from a fellow income-oriented YouTuber called Dividend Bull. He just does US stuff, not Canadian stuff, but he just came out with a pretty cool video about QYLD. If you put just search QYLD in YouTube, you'll definitely find this video. You can't miss the picture of the clown. So a lot of great information there about QYLD and covered call ETFs in general. So just a 9-minute video. I thought it was pretty good. So make sure to check that out. So pick number 2 in Canada, pick number 2 and 3, of course, are going to be Canadian listed picks. It was an easy pick as well. Hamilton multi-sector covered call ETF. So HDIV, that is the stock symbol. We love this fund, right? It's managed by Hamilton ETFs, a monthly payout, the annual dividend strong at $1.50 a share. So HDIV, as we know, is an all-in-one covered call solution that holds 7 covered call ETFs, each with different sectors. That's why it's called multi-sector. And it uses 25% leverage to enhance the yield and return. So the management fee is 0.65, 1-year high 1939, which would give you only 7.74, but right now very, very good price point, 15.59, even less than what it started at, which I believe it was 16.50. A really cool yield of over 9%, just under 10% here at 9.62. So really, really good pickup. Why was this a stock pick? Well, first of all, it's the first ever all-in-one covered call ETF, and it just celebrated its 1-year anniversary. I can't believe it's been that long already. And the numbers are in. So once a fund is out for a year, you could actually have the performance of a year, and the numbers don't disappoint. HDIV beat the overall Canadian market, which is typically measured by the S&P TSX 60 index. Think of it, the TSX 60 index kind of like the S&P 500 for the US. Well, TSX 60 is kind of similar for the Canadian market. It measures the overall Canadian market. So HDIV beat the TSX 60 by 4.5%. Absolutely incredible. So it's doing exactly what it set out to do. It's actually beat the index it tries to follow. So it's a great entry point right now because there's been some recent weakness in some of the sectors it holds. And you have all the cover call ETFs that it holds there on the screen. So things like gold producers, energy, tech, all kind of a bit lower in the last couple of months. So it's a good time to pick it up here. And like I said before, it's actually lower. The price is lower than its initial launch price of $16.50. So it's a good time to pick it up here. Stayed very strong in 2021, relatively stable thanks to its great diversification with a lot of defensive sectors, right? It has utilities, the BMO cover call utilities ETF. It has the Harvest Healthcare one. So utilities, healthcare, even the big 6 banks are there. You could kind of consider them very safe. It has gold producers as well, relatively defensive. So oil prices have done really well, but now they're pulling back. So this is creating a nice pickup point for this ETF, in my opinion. Remember, you have that 25% leverage overall. That's why you have that really nice high yield, very modest leverage, not like a split fund where the leverage is higher than that. So really good trade-off, I feel, 25%. So HDIV, in my opinion, should be a key holding, a key position in any Canadian income-oriented portfolio that, where covered calls is your bread and butter, along with HYLD, its other all-in-one covered call ETF, which focuses more on the US, which of course I love, you all know, and HDIV from our Harvest, which has a little bit of overlap with HDIV, by the way, but I like that ETF as well. So those three should be a major portion of your portfolio if you're an income-oriented investor, in my opinion. Pick number 3, maybe it'll be a bit controversial, but hey, I got to give you I'm still an opportunistic investor, and there's no better time to pick up some Bitcoin, some crypto right now. So it's BTCY, the Bitcoin Yield ETF from Purpose Investments. So it's managed by Purpose. It has a monthly distribution. The annual dividend, 48 cents a share. It varies. I'm basing this on the latest couple of dividends, which have been a lot lower than previous. So I'm going with the low end of the spectrum. So even with the low end of the spectrum, everyone, at this price point right now, you get over 12% yield. So you see there 1-year high, $10. Now it's at $3.89. Now we're talking about a huge opportunity here if you do believe in Bitcoin and crypto, right? So BTCY, as we know, basically holds Bitcoin and writes out of the money covered call options on it to reduce volatility and provide a steady source of monthly income, even though it could vary greatly depending on the NAV, right? If the value goes up, The premiums will probably go up, the dividends will go up. If it goes down, they will be reduced like we've seen. So management fee, $1.10. My opinion, worth every penny because nobody else is doing this type of thing here. Key points and reasoning. Why is Bitcoin ETF, yield ETF a pick of the month? Well, it should be a no-brainer, right? That is the tide turning for crypto. Maybe could be a lot of upside potential. US regulations might be coming for crypto. Could be a lot of potential upside as well, because if there's regulations, a lot of institutional investors could get into Bitcoin and drive the prices higher. So my opinion, this is a great entry point for Bitcoin because many companies and players got wiped and kicked out of the game because they were over leveraged. So we've heard it in the news recently, a lot of fear going on. When there's a lot of fear, that's when you should be greedy, right? Safest way to invest in Bitcoin, my opinion, this is the safest way you could invest in Bitcoin. You're owning it via an ETF, publicly listed secure ETF. You don't have to get a wallet or Coinbase or any of that crap. So you avoid all those scams out there, and with covered calls, right, which just lowers volatility because no matter what happens, you get income every month. Okay, 12% plus yield right now at the low end of the spectrum, right? So it's a no-brainer if you ask me. It's very high yield, a great time to get in here, and your yield could easily get to 15, 16, up to 20% because if the Bitcoin starts recovering and those premiums start going up, your yield goes up, right? So there's a lot of fear right now in the crypto industry, right? You hear a lot of it's very quiet now. There's not much action, which is a good thing. It's a perfect time to take advantage of human emotion, which is fear right now. When there's greed and there's a frenzy and you hear all these crazy stories and people making money and Bitcoin's going to the moon, that's when you should be fearful. So my opinion, take a small niche position here, everyone. Keep in mind it is a very specific and niche asset class. It's a nascent asset class, very new. It could be very volatile. It could go down a lot more. It could go up more. I don't know. I would suggest keep it at 5%, 10% max. That's just my opinion. Don't invest in this stuff using leverage. You don't want to get called away or take too much margin. So my opinion, if you're going to invest in crypto, don't use leverage so you don't have the possibility of getting called away or getting margin called, it's called. Also have a long-term time horizon. This could be crazy for the next 10 years. It's been crazy for the last 10, could be crazy for the next 10, but eventually, hopefully it'll stabilize. So always have a long-term time horizon. Don't focus too much on the month-to-month dividends on these funds. This is a long-term play. It's pointless to really try to, speculate or to predict what it's going to do. If you can't stomach the volatility, everyone, don't invest in it. If you don't believe in crypto, don't invest in it. It's not a problem. Same logic applies for the other yield-oriented ETF, which is Ether. So Ether is even more crazy because it's, and I'm happy to announce that I just did a very long 1-hour interview with the CEO of Ether Capital, which is Purpose Investments' partner that helped them launch their crypto ETF. So they are a crypto expert, and I spent over an hour talking about Bitcoin and Ether and all kinds of stuff and the utility of Ether versus Bitcoin. Really good conversation, which I think you'll enjoy if you're still struggling to understand what crypto is like I do. So those videos are probably going to be 2 videos because it was very long. So these guys especially are specialized in Ether. So stay tuned for those videos coming up in the next couple of weeks once they go through processing. So the same logic, I'm talking about Bitcoin here, BTCY, same thing could apply for ETHY as well, the Ether Yield ETF, the 2 biggest cryptocurrencies. So those are my stock picks for the month of August. I hope you enjoyed them, and let's pick up some great deals together. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys where I ask the audience, I ask you what topic you want me to cover next. So very important. Subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website, we have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other, and it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So, as usual, continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.